This content is brought to you by Link2, which makes private equity investment easy. Link2 allows you to get access to companies before they go public, before they do an IPO. Within their portfolio includes fintech companies, artificial intelligence companies, as well as crypto companies. Some of the big crypto companies in their portfolio include Circle, Ripple, Polysign, Chainalysis, Dapper Labs, Ledger, and many more. So it's a great way to diversify your portfolio to get access to equity. So you may invest in crypto, stocks, ETFs, but now you can get access to equity in these companies before they go public. And obviously that can be very beneficial from an ROI standpoint. So if you'd like to learn more about Link2 and diversifying your portfolio, please visit the link in the description.
Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Martin Bednall, who's the CEO of Jacobi Asset Management. Martin, it is great to have you on the show.
It's great to be here. Thank you very much for inviting me.
Martin, I am very excited to speak with you because Jacobi launched Europe's first Bitcoin Spot ETF. That's pretty groundbreaking. And I have a lot of questions for you around that. But before we get to it, let's start with your background. Tell us about yourself, where you're from, where'd you grow up?
So I'm UK-based. I born and grew up in a place called Stoke-on-Trent that in England. I'm sure you probably don't know where that is, but I've lived in and around London for the past 30-odd years, worked in the investment funds industry for about that period of time, so too long than I care to mention. Worked for some of the big financial institutions, more recently with BlackRock in their iShares division, so ran product development in Europe for iShares, was responsible for and involved in all the ETF, ETP launches that BlackRock did over about a 10-year period in Europe. And I've been with a smaller ETF provider in Europe for a while, and then more recently I've joined, about a year ago, I joined Jacobi Asset Management, joined the founders who'd been working on this project for a couple of years prior to me joining. But that's my background.
So what's fascinating, Martin, is that BlackRock here in the United States is trying to get a Bitcoin Spot ETF approved, and you've beaten your old firm at it, right? At least in Europe, in getting a Bitcoin Spot ETF approved. So is that, how does that make you feel, if you don't mind me asking?
Well, we're super excited by what we've achieved, and in the launch of the listing of the ETF this week. BlackRock, their application is in the US. It's a very different market there and regulatory environment, and they're trying alongside many others to get that first spot Bitcoin ETF. It's a very interesting situation to see how that plays out over time. Here in Europe, there is existing product in the form of note structures, but we are the first fund structure, the first regulated ETF to be listed in Europe, and for us that is a great achievement and very exciting, and we now feel that institutional investors in Europe have the product that they have been looking for to get into the digital asset space.
For sure. And what was your first encounter with Bitcoin, and what was your aha moment? Given that, especially that you were from the TradFi industry.
Well, launching many ETFs over many years, you look at the various different markets and changes that are taking place in the world to see what exposures you should be delivering to investors, what exposures investors want. So blockchain investing was something that sort of came before crypto, I'd say, in terms of what we were looking at. So we've looked at blockchain for a number of years now, or I have in the different roles that I've had, just to see what's the likely uptake of investing in that, what's the likely uptake of that technology. And from that, then there's the connection to crypto and looking at crypto investing, the regulations around crypto and how you can bring products to market. So been looking at that for, I'd say, something like 7 years. In terms of my personal investing, I probably bought in some crypto 5 years ago would be the first time. And so it's an evolution of that. I probably wouldn't say there's an aha moment. It's just incrementally, as you look at these and research the themes, then it just builds up. And as you understand what the art of the possible to bring products to market that are what investors want, are safe and secure, and can be built with the right infrastructure, and you sort of build on that, and you eventually get to a product that you can bring to market.
For sure. So tell us a bit about Jacobi Asset Management, the history, the services, and the type of clients that you work with.
Jacobi was founded around about 3 years ago. There was a number of TradFi and crypto guys who knew each other. They came together with the view that thinking that the products that were on offer to the marketplace weren't as regulated as they could be. And they wanted to bring a product that was really safe and secure, that, say, their father and mother, their relations could invest into, and they'd feel good about that. Now, we've got to a place where we're bringing a product to market that is for institutions and not for retail investors. But that was the journey. That was really the thought process that went into Jacobi in its early days, is really around a regulated, safe and secure product that people would feel comfortable taking to the market and getting investors into. And then that journey is carried on to think about sustainability and the sustainability, environmental concerns around Bitcoin in particular, around proof of work chains. And so we've put a lot of work into that, thinking about how we can make our fund as sustainable, as environmentally friendly as we can. And so over the last year, we've worked with a firm called Zumo to add the sustainable element to the fund. And we can get into more details on how that works.
Yeah. Oh, for sure. Because I noticed that for this Bitcoin Spot ETF, there was a mention of decarbonization. And tell us about that. And is it like Bitcoin that you're sourcing from specific miners who use specific types of energy? Is that the gist of it?
So we don't go back all the way to the mining. So for the fund, we have what's called a Scope 3 emission. So they're not our emissions, they're emissions that are associated with what we're delivering to the market, i.e. pure Bitcoin exposure. So the fund itself invests every dollar that we receive into Bitcoin. So it's a pure beta play, 100% physical Bitcoin held by the fund in custody with Fidelity Digital Assets, safe and secure, pure beta exposure. What we're also doing, so what Jacobi Asset Management is doing for the benefit of the fund, but not at the cost of the fund or impacting its return profile, is we will buy and retire renewable energy certificates, also known as RECs. So what these RECs are is they are the carbon attributes. It's a tradable instrument that has the carbon attributes of renewable energy. It's a market instrument. It's used by utility providers, for example, to provide you with a green energy tariff. So, for example, if you have a green energy tariff and your neighbor doesn't, you still get the same electricity from the grid. The way that your utility provider says to you that you are using renewable energy is they buy renewable energy certificates. So they've bought those carbon attributes and they're providing those to you. So what we do is, for the energy usage of the Bitcoin network that we're responsible for, that the fund is responsible for, so its holdings compared to number of coins in issue, the number of on-chain transactions we have, there's a very clear estimation of the energy usage of the network. And so we can get very confident around what our share of that is. We will buy and retire renewable energy certificates to cover that energy usage. So no matter how the Bitcoin has been mined, whether it's used renewables or not, we will still buy renewable energy certificates as though there has been no renewable energies used. So we go in above and beyond what we need to do, because we do know that there is some renewable energies used in the mining of Bitcoin. Right. And so from that, we can very clearly, categorically say that our fund has been decarbonized. It's fully used renewable energy in its operation, and there is no environmental impact. And then the knock-on consequences of that are that there's a regulation in Europe called SFDR, Sustainable Finance Disclosure Regulation, and funds, investment products in Europe, they categorize themselves under that regulations. So the best category is Article 9, and that is for funds that are doing positive things for the environment. So green tech, things like that.
That's fascinating.
You have Article 6, which is we don't worry about environmental ESG concerns. And then you have Article 8, which doesn't have environmental concerns as its investment rationale, like Article 9 does, but looks at the environment and covers any environmental issues. So we've had this reviewed by Dutch lawyers. Our fund is an Article 8 SFDR ETF, and that is absolutely a world first.
Yeah, I mean, that's fascinating, and how you were able to do that and put the packaging of those two things together. And I'm sure there's probably competitors looking to do the same, but like you said, you're the first to do it. Now, the ETF trades under the ticker BCOIN. Can you tell us about the listing on the respective stock exchange, and who can start investing in through this ETF?
So the fund is listed on the Euronext exchange in Amsterdam. It's one of the preeminent exchanges in the world, not just in Europe, in terms of the volume that are traded on it, and in terms of the number of ETF listings on the exchange. So it was an obvious choice for us to market the fund, and also because the Dutch regulator recognizes so the fund is domiciled in Guernsey, which is unusual from an ETF perspective. Guernsey is a highly regarded financial services industry. The regulator is highly regarded. It's not that well known for ETFs, but we've launched the fund, we've domiciled the fund there, and the Dutch regulator recognizes the Guernsey financial regulator as an equivalent regulator. So again, that helps for us to take it to the Netherlands. In terms of who can invest in it, the fund has been designed for institutional investors, not retail. So the regulator, in approving the fund, has put that restriction on the fund at this moment in time, to say that it's really just for professional investors, institutional investors. So not for pure retail. In terms of where we can sell, we're getting expressions of interest through our website, jacobiam.com, where anyone can register their interests from all over the globe. Actually, at this moment in time, the level of interest has been far exceeding what we expected, and we are getting inquiries from the Middle East, Malaysia, and then around Europe, and so we have compliance controls to regulate all of that, but it's phenomenal where the interest is coming from.
Yeah, there's certainly a growing demand for this asset class, and especially Bitcoin. So I'm not sure how it works in Europe, but maybe you can explain it to us. I know here in the United States, let's say BlackRock gets a Bitcoin Spot ETF approved, it would allow registered investment advisors around the country, wealth managers, to then be able to offer it to their retail clients. Do you think that is down the road for Jacobi and the ETF? You know, phase one is maybe institutional, but maybe you continue working with the regulators to get this to be open to retail investors as well.
Absolutely. So that is what we would be working with the regulators to to make that evolution. Regulators are conservative. They have to be. That's their job. Their job is to protect investors.
Yeah.
And in particular to protect retail investors. They're not as knowledgeable as financial professionals. So they are first and foremost in the minds of the regulators as they allow new asset classes, new products to come to market. So it's absolutely right for the regulator to take the first step to say, okay, we'll allow this, but we'll allow it in a restricted way at this moment in time. Let's see how it performs. Let's see how ensure that all the regulations are followed well, that it's well managed. So we have a regulated manager managing the funds that reports into the GFSC, the Guernsey Financial Services Commission, and they'll be. It's the first Bitcoin ETF. They're going to be all over us, and to make sure that things are working as they expected. And we will have those conversations to say, okay, look, things are going well. The fund's operating as we said it would. Let's have a conversation about how we then allow retail to come into this, because actually our fund, our ETF, is the safest, most secure, most transparent way for anyone, including retail investors, to invest into Bitcoin. The assets, the Bitcoin is held by a regulated custodian in a regulated fund structure. So traded on traditional finance exchange. It's not like trading on a crypto exchange and holding your coins on a crypto exchange, which we've seen in the past has caused investor losses.
Yeah. Absolutely. I was about to just ask you, because I noticed that you mentioned in the press release was Fidelity Digital Assets. Are they the one custodying for you? Are you sourcing your Bitcoin from them?
Yes, they're the custodian for the fund. In terms of sourcing the Bitcoin, the way ETFs operate is we have what's called an authorized participant. So they are the firms, they're the financial services firms that will interact with the fund in terms of subscribing or creating new units in the fund or redeeming if there's selling activity. So they act as the go-between between the fund and the secondary market. So anything traded on exchange, anything traded OTC. So there we have the likes of Flow Traders, Jane Street, DRW, well-known, well-respected firms that operate across the ETF industry globally. So those are the firms that will deliver the Bitcoin to our wallet, the fund's wallet at Fidelity, or we will deliver it back when they redeem any assets from the fund.
Oh, absolutely. Yeah, I mean, those are, like, to your point, those are very big names, well known in the TradFi space, and we are seeing more of those TradFi folks coming into the market and offering these services. And to your point, a lot of the startup exchanges didn't do a good job. I mean, we had epic collapses, FTX, Celsius, a lot of investors got burned. And I think now the regulators are going to come in and say, well, you need to have insurance, you need to have proper custody. All these things need to be put in order for this market to continue to grow. But great to hear that you guys are working with some of the big names.
Yeah, I mean, you don't get bigger than Fidelity.
For sure. Now, I'm going to ask you a very silly question, but I know because I saw some tweets from different people, debating spot ETFs and so forth. Your ETF is physically settled Bitcoin, right? Not paper, not like futures. To confirm,
it's physical. So it's physical Bitcoin delivered into the wallet at Fidelity on the blockchain. If you can do a spot ETF as opposed to a futures ETF, you'll do the spot ETF. I mean, that's why everyone's applying in the US for spot ETFs. There's futures-based ETFs in existence, but the holy grail is the spot ETF, and that's exactly what we've done.
Absolutely. So will Jacobi be looking to get spot ETFs, given that you have got an approval in Europe, in other countries and regions? Is that, maybe part of your roadmap?
I think more likely for us to take the existing fund and future funds to distribute and list in other markets and cross-list into other markets, rather than set up locally domiciled structures to launch these. That's more likely to be the process. We're having conversations in Asia in terms of listing the fund over in Asia. Same in South Africa, for example, in parts of Africa. Same for Middle East. And then we've got other exchanges in Europe that we would look to list the fund on. So that would be the next phase of the development, rather than setting up similar fund structures in different parts of the world. It all depends on what's the art of the possible with this as well.
Yeah, that absolutely makes sense. Like, certainly getting on the Hong Kong Stock Exchange and some of these others, right, will be really big. And on that note, obviously you just kicked off the Bitcoin Spot ETF. So I don't imagine you're going to be looking into altcoins, but let's say a year from now, will you be looking into an Ethereum Spot ETF or an XRP Spot ETF or whatever, altcoin basket ETF or whatever it may be?
We've absolutely got a product pipeline that we're looking at, researching, and trying to understand what's the next exposures. There's some obvious ones that you just mentioned, right? Spot Ethereum is an obvious next step for us, and other single coins, and then multi-coin baskets, as you've mentioned, certain thematics within the digital asset space. We can look at yield type products and things like that. What we will be is we'll be very disciplined and thoughtful about what we want to launch. We will also listen to investor feedback. What are they looking for? What's difficult for them to invest in that they're really interested in investing in? So it'll develop along those lines. But we would be hoping to launch more product this year, not in 12 months' time. I would certainly be hoping that by the end of this year, we've probably got three ETFs out there, with a plan for the next 12 months, 24 months to grow the product suite that we have.
Oh, that absolutely makes sense. That's exciting. Now, let's talk about what's kind of happening here in the United States, because given that you worked at BlackRock and you also have obviously a plethora of experience with ETFs, you were able to get one approved in Europe. What do you think about the dynamic of what's happening here in the United States with the SEC and all of Wall Street, including BlackRock, trying to get a spot ETF? And do you think, we might see that approval this year?
It's very exciting and very interesting to watch from over here. What's going on in the US? I've never seen so much excitement, so much press around, and so much anticipation around product launch than a spot Bitcoin ETF. With the amount of applications that are being made, and then BlackRock comes in and really just adds a lot of credibility to the digital asset space. When BlackRock comes in, when Fidelity and that, but I mean BlackRock is the whale here. When they come in, that tells the rest of the market that there's something there. We've gone, the noise from BlackRock went from it's an index for money laundering to potentially the new gold.
Yeah,
that's great that they've kept an open mind, and as things have changed and progressed, they have then changed views on this and that class, and then to come in is just fantastic for the whole market. In terms of what happens there's a lot of speculation. I'm not super close to that. We're over here, and okay, I was at BlackRock, but there's plenty of people in BlackRock that won't have a clue what's happening on that ETF application. I've read in the press that many people think they'll all be approved at the same time, which I actually think has a lot of merit. Given the exposure, the SEC will have concerns about giving someone, first mover advantage and be seen to be being preferential to one application over the other. So I think that has a lot of merit to it, that they'll want to make sure they're happy with lots of them before they say, okay, go. We're now approving this. I think that even doing that gives the likes of BlackRock and the big players massive advantage, because they have so much more distribution power, distribution reach, their brand name, and the security around that probably still gives them the edge.
Yeah, for sure. It's everyone is waiting in anticipation, and maybe with you and the folks at Jacobi able to getting this ETF going, it might put a bit more pressure on the SEC to do something this year. But we'll have to wait and see. It's all speculation at this point. Tell us, what else is on your roadmap? You mentioned looking to get some other ETFs out there. Obviously, you're going to market your BCOIN ETF. Is there anything else on your roadmap for 2023 that you want to highlight?
Well, we're focused on digital assets. So as a firm, we're specializing in digital assets. We are going to focus on this initial launch and the sort of sales and marketing activities around that, and with the future product pipeline. So you have to be focused as a business. You can't go off and do lots of different things. Otherwise, you just won't be successful. So at this moment in time, we need to really focus on the first launch of BCOIN, as you say, and just then making sure that there is that sort of momentum behind that fund, and then future funds coming out to the marketplace.
Yeah, that absolutely makes sense. Let's talk about Bitcoin a bit. The halving is next year. We've seen historically the 4-year cycles play out, where you have a bull market, bear market, and things like that after the halving. Do you see a similar scenario playing out after the halving next year, where we may possibly hit new all-time highs in 2025?
I think we'd all hope for that. People who are bringing Bitcoin products to market would really want to have the sentiment around Bitcoin and digital assets to be on the bullish side rather than on the bearish side. So historically, that's what's happened. I think there's factors in the market now which are a bit of push and pull in terms of where the prices are going. You've got the halving, as you mentioned, as we talked about. We've got the spot ETF applications in the US, creating a lot of interest and noise. But then on the counter side, you've got the general macro environment, persistent inflation, raised interest rates that, are they going higher? Are they pausing? When are they coming down? So I think they're short term, there's very much, it's very difficult to see which way the market's going to go. Longer term, though, the bullish narrative is in our view, is the one that will play out. So we bring products to market. It's a tool that asset managers, investors, institutional investors can use when they want to come into the market. As we've found out, there's lots of institutional investors who want to invest, not really sure how to do it, because it's very different investing in digital assets than in traditional assets. So they haven't had the product to be able to get into the market. We've given them that now, and so they can come in when they want now. When they see that macro environment, that narrative turns to the bullish side to really sort of jump in, and so that's what we're proud of, that we've now given the market what it needs.
Oh yeah, absolutely. And something that just came to mind, and I was going to ask you earlier, but I forgot. You mentioned the Middle East. Are you getting calls from sovereign wealth funds and things along those lines? Because I know that's been, everybody's waiting to see what some of those folks are going to do. And like you said, you have the product now, the regulated on-ramp for them to get into Bitcoin. Have you been getting interest from sovereign wealth funds?
We've had interest from the Middle East. I can't really go into too many details about who that is, but sovereign wealth funds, the amount of assets that they manage, anybody being able to to get assets from them, it's a massive win. So, but that takes time. They don't just jump in. They, as with many investors, and rightly, they want to do their due diligence. They want to understand the product structure. They want to understand its performance. And when you're new, when you've only just launched, you need to build up time to show the performance of the fund. And I'm happy to say that the fund has tracked Bitcoin price perfectly so far. So, we've so far the fund is delivering on what it's meant to do, and then we just need to continue with the conversations with the prospective investors, and over time we'll build those assets.
Yeah, absolutely. Going back to Bitcoin and its adoption, we saw countries like El Salvador make Bitcoin a legal tender. Here in the United States, Bitcoin mining is booming in the different states. And it seems like there's more Bitcoin adoption happening globally. And, price aside, but just even holding it as a store of value, more companies getting involved in mining. What are your thoughts? Do you think that trend continues, and could we see central banks start to hold Bitcoin as a reserve like they do gold?
I understand that certain central banks can start to hold Bitcoin crypto assets from 2025. So that's in motion in some parts of the world. And we would just see that it's still a nascent market. It's still in its early days. So absolutely, there will be more and more uptake across the board, not just in mining and not just in central bank activities and digital coins, which I think something like 93% of governments are now looking at doing, their own coin, and this is it just all escalates and creates momentum in the marketplace. The Bitcoin technology is in its infancy, and the number of industries and functions that can make more efficient, it's just there's so much potential, and on the back of that, the association of digital assets just means it all sort of comes together.
Yeah, I'm excited for the future of crypto. There's a lot happening. Just recently PayPal launch a stable coin on the Ethereum blockchain. You have just so many, institutional adoption, TradFi adoption of crypto. In the EU, you guys, of course, are way ahead of the US. Obviously, a spot ETF has been approved, but also you passed crypto regulations, the MiCA law. I know in the UK, they also passed crypto regulations. Can you share some thoughts on that, given that, you're in that region, and what has been the impact of those regulations being passed?
Yeah, so the MiCA regulation was for the digital asset space was a huge piece of legislation in Europe. It really sort of harmonized the rules and just gave more certainty around the regulatory sphere that people are operating in. I know there was a lot of comments from the US. It's like, why can Europe do this and the US can't? And it's right that it is a piece of regulation that sort of really helps and possibly means that Europe, businesses, digital asset businesses, crypto businesses move to Europe because there is the legislation, the regulations that they can work with. Clearer regulations are helpful to everybody, so long as they're not too restrictive, too onerous regulations. But having them and knowing the rules of engagement that you can work within, it just makes a lot of sense. So Europe and the UK have done that. So our Prime Minister in the UK, he said that he wants the UK to be a crypto hub. So working in the UK in this industry is great, because there's if the government supports you, you can get more done and feel more secure in what you're doing. So yeah, I think that those sorts of regulations are needed. The harmonization of rules around the globe would be even better.
Yeah.
But that's a difficult ask.
Yeah, I'm hoping the United States can get it right pretty soon. There's some bills that have made it to the House and got marked up, but nothing formally approved yet, and then it has to go to the Senate. So we've got a little bit of an uphill battle, but I'm really happy with what Europe has done and the UK as well. Just they're leading the charge right now, and hopefully the US can catch up.
You've got what DCCPA in the US. That's a regulation that's being discussed in the House at the moment. Is that right?
Yeah. Yes. And Patrick McHenry, Glenn Thompson bill. There's also in the Senate, Senator Lummis and Gillibrand's bill. So you got two major ones that could potentially make it through, but the one in the House is what you mentioned is I think the one that's making the most progress.
Yeah, and I think that puts the regulatory oversight more on the CFTC rather than the SEC, which I think many people would prefer, given the CFTC seems to be more pro digital assets crypto than the SEC has been.
Oh yeah, for sure. And I was going to ask you about any thoughts on the Ripple lawsuit ruling that seemed to be pretty big here, at least in the United States. Giving a lot of clarity from the court to the secondary market and how tokens should be viewed. They're not intrinsically securities, but rather is how they're packaged. And it goes back to the Howey test, which we have here in the United States. It's not the oranges or the orange groves. It's the investment package, the contract that's put around them. Any thoughts on that? I know the EU, for the most part, they view all these things as virtual currencies.
Yeah, so the Ripple decision was hugely positive for obviously Ripple themselves, but other altcoins, similar altcoins. I think Solana had a very good price action on the back of it. So having those verdicts that go in favor of the likes of Ripple is great news for the industry. Obviously, the SEC can appeal it, and we'll have to see what happens there. But they of course have knock-on implications because these assets they're not bound by a geography. They're global assets. So whatever the US does and those sort of rulings has a knock-on effect everywhere else. So we need to be fully aware of what's going on there and the implications for everybody, including the price. If we're offering investment products in altcoins, it's important for us from a risk management perspective, to be aware of all these what's going on in the broader marketplace.
Yeah, it absolutely makes sense. And I hope the US can get this right pretty soon. I know we're coming up on time, so I want to ask you about CBDCs, central bank digital currencies. Central banks around the world taking the blockchain, which it was obviously created under Bitcoin. They're tokenizing fiat currencies. My personal concern has been privacy. I think CBDCs will have a lot of benefits to the economy, the movement of money, and so forth. But a lot of folks are concerned about privacy. What are your thoughts on that?
I think there's a use case for the different coins. So CBDCs will have a use case. You can understand why governments are looking at this as a way to digitize their money, and it makes a lot of sense from an efficiency perspective, but it also makes sense from a control perspective for governments. So they'll have their use, and you can see that is something that will happen. But then you will also have other non centrally backed coins that will have their own use cases and will live alongside CBDCs.
Yeah, that makes sense. It seems everything will be running on the blockchain in the future. We're headed to what I would like to call the token economy, and just different companies may have their own stable coins or their own tokens, which would reward consumers and whatever it may be. Governments have their CBDCs, and then there's Bitcoin, and there's different digital assets. So it's going to be interesting to see which ones are going to be the winners and what's going to have lasting potential. And I got some rapid fire questions for you. Favorite food?
Curry. Indian food, sorry, I should say.
Indian food. Oh yeah. Favorite musician or band?
Oasis.
Favorite movie?
Godfather series.
I was just watching The Godfather this past week. It's so good. Favorite book?
Brave New World by Aldous Huxley.
And when you're not working at Jacobi, what are you doing for fun as a hobby?
Mostly probably cycling is the biggest thing that I do outside of work, and looking after the family and driving the kids around. But yeah, cycling. I'm not doing as much as I used to, but hopefully at some point I can get back into it.
Oh, that's awesome. Martin, a pleasure chatting with you. Congrats again on the ETF getting launched. And it's exciting times. I saw the news and I was like, wow, this is incredible. And, I'd love to have you back on in the future as you launch new ETFs, maybe around Ethereum and other altcoins. But thank you so much for joining me.
Oh, it's been great talking to you. Thank you very much.